What do you think when you hear growth fund? A fund that grows, goes up in value. Did you know it can go down in value? Do you know why? What do you think when you hear a fixed income fund? A fund that pays a fixed income. You'd be wrong. How about a high yield fund, or an index fund, or a balanced fund? Then there are share classes. Do you know your A, B, C, R, I's? Following is a very basic understanding of these things, but it should give you the basis of knowledge you need. Growth fund means stocks. Equity fund means stocks. Large cap fund means large company stocks. Mid cap fund means middle-sized company stocks. Then small cap and emerging fund means smaller company stocks. And stocks go up and down and pay some dividends. What stocks are and how they act is explained on the DVD called All About Stocks. Fixed income fund means bonds. And bonds go up and down in value and pay interest when they are paid from a mutual fund. It's called a dividend. To understand high yield funds, government bond funds, municipal funds, and UITs, watch the DVD All About Bonds. A balanced fund has some balance between stocks and bonds. Then there are indexes of stocks such as the S&P 500. So a S&P 500 index fund owns the stocks that compose the S&P 500. So it is not actively managed and is called an index fund, since the fund is designed to move with the index. Watch the DVD on mutual funds. Why don't they just call it a stock or bond fund? Well, years ago, mutual fund companies tried to tie the name of the fund to your investment objectives, such as growth, or income, or safety, or even a target retirement date. Also, there are mutual funds that are named after the style or technique they use to invest the money. These are mostly actively managed funds that don't simply invest in the index, which is passive management, but try to outperform other methods by actively managing the account using their strategies and stock picking ability. The Fidelity Contra Fund is so named because it invests contrary to what everybody else is doing. Growth funds attempt to pick the stocks that will grow to large companies. Value funds try to pick stocks where the company is already a good value. Some funds pick stocks that pay a lot of dividends. Therefore, by understanding the basics of stocks and bonds as taught in the Money School series, you will also understand mutual fund names. Alright, a magazine once posted this suggestion. Put 10% of your money in stocks, 30% of your money in bonds, 20% of your money in cash, like money market funds and CDs, and 40% of your money in mutual funds. What is wrong with that statement? Mutual funds are not an asset class, so the term mutual fund doesn't tell you anything about what they are invested in. Most mutual funds are pools of stocks and bonds, or real estate, or gold, or, well, you get it, asset classes. Mutual fund share classes. To most people, the term class means a group of people in a classroom studying a subject. This does not mean that. The same mutual fund, with the same fund managers, with the same assets, can be sold to the public with different fee structures. So, mutual fund share classes refers to the fee structure. At the end of the title of the fund, you will find a letter. The various fees charged by the mutual fund and how they are charged and paid are covered in the DVD Mutual Funds. So this is going to be a simple explanation of the various letters. But even this can vary from fund family to fund family, so look in the fund prospectus for all the details. A shares mean front-end load, which means a commission is charged when you purchase the shares. For a full explanation, see the DVD on mutual funds. B shares mean no front-end load or commission is charged when you purchase the fund, but there will be a number of years you have to hold the fund or they will charge you a commission. The sales charge is contingent upon how long you hold the fund, so therefore deferred for a few years. This is called the CDSC, Contingent Deferred Sales Charge. C shares have no front-end load or back-end CDSC normally, but pay the broker through a large 12B1 fee, also explained in the DVD. R shares are retirement shares and often work a lot like C shares. I shares are institutional shares and usually have very low expenses and pay no commission to a broker. Oh, wait a minute. You didn't tell me which asset class to choose and which funds to pick. Well, it depends on a lot of factors. Check out our articles in the Investing School website and you will make the right decisions. A good investor is an educated investor.